Also, there's a new initiative company has taken on the fabric side with the man-made fabrics also, which will definitely increase the share of fabric compared to the pure spinning side only. On the garmenting side, there are still no plans to expand it in a big way. It's a small unit we have. We'll continue to grow it slowly, but I think there's no clear plans as of now that we want to increase it in a big way. So it's still, we are running it profitably, but I think considering the overall labor component, we are still to make up our mind whether we really want to expand it or not. So definitely going forward next couple of years, fabric will continue to grow. Definitely both cotton side as well as man-made, and I feel personally the share of fabric in the overall top line will continue to grow from today's level as well.
Hello? Hello, Mr. Suryanarayan? Hello? Sir, the line for the participant seems to be disconnected. We'll move on to the next question. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. Our next question is from line of Sandeep Baid, who's an individual investor. Please go ahead.
Good afternoon, sir. I just wanted to understand how does CCI price its cotton? What is the basis of that, and do they also sell it at a loss compared to when you compare it with your procurement price?
So it depends upon, first of all, it depends upon all the demand and supply. If the demand is higher, they'll continue to increase their prices, or if the demand is not there, they'll reduce the prices. Primarily, we understand the last year's CCI policy was whatever is the import parity of cotton, including the duty, they were trying to sell it at those prices. But since because most of the smaller spinners, they didn't have a choice to import the cotton, so they were forced to buy it from the CCI at those prices. But when the losses started increasing, the spinners stopped buying from the CCI, and CCI kept reducing their prices. So basically, what I understand, they look at it that whatever is the import parity of a cotton, based upon that, they generally decide their pricing. At the same time, the industry has been talking to them that if we have to pay the 11% duty, then how will we be competitive? But I think second part is more on the demand supply, because if you add 11% duty and the spinner is not in a position to make money, the demand will keep coming down only. And that practically or partially happened towards the last 2 to 3 months. And if we look at the CCI still has almost about 1 million bales available to them from the last stock. And if we also look at the sale for the last almost 1.5 months, will not be more than 10,000-20,000 bales, maybe not more than 20,000 bales for them for the last 45 days. So I think it's though they will try to fetch the maximum prices so that losses could be reduced, but at the same time, to that extent, they're flexible because they want to dispose of the stock also. But the new season is started, they're still carrying a stock of 1 million bales, so I don't know what policy will they make it, taking it forward, and how do they price the product going forward.
So you're saying that if the demand is not good enough, they are willing to sell it at a price lower than your procurement?
Yeah, sure. So last year also, I think whatever prices they procured, and later on when they were selling there, it was definitely they're taking some loss also.
Right. And given that today they already hold 1 million bales in stock, they may not be very aggressive in terms of buying from the market at the moment?
No. That choice is not with them, because that's a mandate given to them by the government of India that whatever is the minimum support price the government has committed to the farmers, the CCI is obliged to pay to buy the cotton at those prices. I don't think that's a choice available to CCI. They will continue to buy it. Now, what price do they sell? I think that's a separately later stage they'll have to decide, but it's not that since they already are carrying 1 million bales, so they'll not buy. That choice is not there with them.
Okay. And secondly, can you comment on how is the demand from the home textile players for yarn?
Home textile players are doing reasonably well in India. So if I look at, most of them are running full capacity, especially on the sheeting side is doing pretty well. Even on the towel side is doing well. So most of our customers, we supply lots of products to home textile players. I think they're doing reasonably well.
Thank you so much.
Thank you. Our next question is from the line of Keshav Garg from Counter Cyclical PMS. Please go ahead.
Sir, I wanted to understand the garmenting part which you basically talked about, that you are not sure about scaling up the labor in that division. Sir, firstly, sir, is the government has a fixed term employment already implemented in the textile industry?
Yes.
So then, in that case, sir, what is the apprehension about scale up? Hiring more labor. So should that resolve the labor issue in the industry?
No, it doesn't resolve the issue. So there were two issues. One was the fixed term, one was the permanent labor, which by the fixed term the issue gets resolved. Second is the cost part. If you look at the Indian cost today, the worker availability is a big challenge in most parts of the country except UP, Bihar and West Bengal, where most of the industries either in the down south or in the North India or central India. The cost of labor in India is not less than $230 to $240 per person as of now. Whereas the Bangladesh cost is still about 11,000, 12,000 taka, which is equivalent to about $120. In garmenting industry, the overall labor cost is always in the range of about 25%, 22 to 25%. And if our cost is double, we're talking of the Bangladesh's costs are in the range of about maybe 10%, 11% of garmenting, we will be at 20% plus. So we'll never be competitive even on that cost also, because our labor cost is going to be very, very expensive. Either the industry starts thinking they go to UP, Bihar, where the labor availability would be there. But wherever the migrant labor is coming in, the availability and the stability of labor is a huge challenge as of now. So it's neither available nor stable. The attrition in the industry is almost in the range of about 5%, 6% per month, even with a cost of $250 also. I think the concern for us is the way the Indian social economic factors are moving, where people do not want to come to the cities to work. They got some support under Manrega, they got some support under Ayushman Bharat, they got some support under different schemes. They're happy staying in their places. So either the entire industry moves to those areas which has its own challenges, or if the labor doesn't come here, how the labor intensive industry will work. I think this is a major challenge for next, which will be more clear in next 1 to 2 years. How does it work on? So till the time we are clear on the availability and the cost part, there is no plan for us to expand it in a really big way.
Sir, and also, sir, many state governments, I understand, they are giving around 5,000 rupees per month per head labor subsidy. That is, the government will pay those wages on behalf of the industry. And sir, plus the central government is also, I think, giving some PF for 2 years or something like that. So all together, even after including all these basically incentives and subsidy to the industry, also it does not make sense.
It doesn't make sense because most of the states which are giving are for the local laborers. Local labor is not available, it's not trained, and you want to take the people from outside, you will not get the subsidy. Two, I think more than the subsidy, you first have to look at whether the states in terms of the overall ecosystem is a workable state or not. So, though many states have given these incentives, for example, now if the Gujarat is given, the local Gujarati is not ready to work in a garment company. So, even if there are subsidies available, what will you do with that? So I think there are different challenges. I'm not saying the opportunity is not there, the opportunity is there, but looking at the cost and the historic rates, because wherever there are clusters, now there are lots of good clusters in Tirupur and down south. There are good clusters in North India. There's no subsidy available in these areas. Now going to a new cluster altogether and start creating those capacities, I think it's going to take some time. I understand the good initiative of the government on the PM Mitra scheme is there, but I think still none of the part is implemented as of now. Maybe next 1 year, there are lots of development I understand is happening on those parts, and they start allocating or allotting the land maybe next 1 year or so. So it's only after that we will be in a position to know whether we can make any business case for this. Only on the basis of subsidy, putting up a capacity, probably we are a little hesitant to do that.
Sir, and also, sir, what about the domestic garment market, which is constantly increasing in size? Sir, what is the import duty on garment imports? And, sir, like, can't we do garmenting for the domestic market in case there is a good protection available in terms of tariffs?
No, there is not enough protection available. So there's already a good amount of garmenting which is happening in Bangladesh, and lots of, for most of the brands which are operating in India, they started importing the garments also.
Okay, sir.
So both in terms of garments, or even on the fabric side also, especially the knitted fabric, I think if you look at most of the man-made based fabric, looking at an import of about 50, 70 tons per day, about 3 years back, today it's more than 1,000 tons per day. Because our raw materials are expensive, all our fibers are expensive. As a result of that, yarn will be expensive. So it's much cheaper for the fabric to get imported.
Sir, so lastly, sir, you alluded to the raw material cotton, polyester and viscose being expensive, more expensive in India. So can't the industry, at least for the exports under advanced authorization scheme, they can import viscose and polyester and export the end fabric or the garment? So, I mean, does that not still make sense? I mean, then what's the problem in that case?
So there are two problems in that. One, even if you want to import viscose or polyester, the freight component will be there. So we are competing with, let's say, China or Vietnam or Korea. We're talking of the raw material available there, and the raw material which will be available even under advanced authorization will have a component of freight onto that, which will be a one additional cost too. I think for the yarn export, we can still do it. But if I have to sell the yarn to the domestic market for the fabric or for the garmenting, then the advanced authorization work cannot work. Because there are different duty structures and there are different incentives available on those segments. So if I have to export yarn, I can do that. But again, my cost will be high because my raw material will add the component of freight onto that. And if I want to sell to the domestic market for the further export of either fabric or garment, will not make sense at all. But that can't be done under advanced authorization. So actually going by all the policies today, I think there's definitely a concern. How do we export the end product?
Right, sir. Understood. So thank you very much.
Thank you. Next is a follow-up question from the line of Suryanarayan Nayak from Sunidhi Securities. Please go ahead.
Yeah, sir, just line disconnected. So just my basic concern is that you have been very much showing concerns towards the ready-made garment area because of the labor issues. But on the yarn side also, we see the government issues in successive years. They have been raising the MSPs, and rising MSP Suomoto doesn't rise our spread. Then we are also at that problem also that is not actually addressable, and resultantly, at least the ready-made garment players from the south, they're able to earn decent return ratios, returns than ours. So even the lowest margin happens to be around 11%. That is 10 to 11%. That is consistent. But in our case, that is not. So any sense you will be thinking on the garment side, because we are hardly present there.
I've mentioned you the reason of garmenting, that because of the non-availability of labor and a very high cost, we haven't made up our mind as of now. So because we are basically a textile material producer, and garmenting and textile are two different words, they are two different businesses. So we have to look at it on an independent basis. And I'm not saying that we have rejected it also. So whatever small capacity we are doing, we are marginally increasing that capacity from 6,000 shirts per day to about 10,000 shirts or so. And maybe we may take another 1 or 2 years to make up our mind finally whether we should go big way into the garmenting or not.
So in the case when the successive years we will be seeing at least 5% rise in the MSP, that is basically given because the government wishes to placate the farming community for that matter. So in that case, we are actually not getting that kind of mileage because cotton happens to be an international commodity. So what is the recourse to pure yarn players like us?
So there could be 2-3 possibilities. One, your first point is very valid. The MSP will keep increasing 4 to 5% every year, which has been doing, and it may continue to do the same. But at the same time, the industry is talking on 2 issues to the government. One, you allow the import of cotton duty free. So even if our cotton is expensive, at least we can import, as the rest of the world will also be doing, so we'll be competitive. 2, the industry is also talking to the government in case you want to support the MSP, which is important because if the government doesn't increase the MSP, then the farmers will not be growing the cotton at all. So if we want to support the farmers, better the CCI procures, but their marketing strategy or the pricing should be aligned to the international market. So that's the industry's request to the or suggestion to the government. Let's see whether the government agrees to that or not.
Okay, thank you, sir.
Thank you. A reminder to the participants that you may press star and 1 to ask a question. Our next question is from the line of Rajesh Jain from RK Capital. Please go ahead.
Yes, sir. I have 2-3 short follow-up questions. So your blended margins are like today 13 to 14%. What would be the margins on the fabric side?
Definitely much better than this.
Sorry, definitely?
Much better than this. We don't share the margin separately, but it's definitely much better than the average.
Okay. And I think in the last con call, you mentioned about entering into technical textiles. So what would be the projected margins and can you throw some light on how is the capex going on there?
So on the technical textile, we are going in for a 100% man-made fabric project. It is only on the apparel side. I request Sagrika to answer this question.
Yes, hi. So first about the capital expenditure, it's progressing well, and we've been ordering our machinery as planned, as scheduled. So we are aiming for next year around September, October, it should be operational. The capex, so we are dividing it into 2 phases. The first phase, we are aiming for a capacity of 15 lakh meters per month, and our profitability, our PBDIT to sales would be in the range of about 25-30%.
Sorry, just can you repeat the last sentence? I missed just the last sentence.
Yes, the PBDIT to sales that we are projecting are in the range of 25-30%.
Okay. And sir, you had mentioned in your opening remarks about the reuse of or the recycling of old garments, which has taken away a bit of demand. So just can you explain this trend a little bit more? Is it a big trend that is catching up, and can it significantly impact long-term demand?
So definitely in terms of thought process, most of the Western world is looking at this. Europe has passed a law where starting next year 25, they say the landfilling through the garmenting is not possible or will not be allowed. So it has to be recycled or it has to be resold. So most of the stores in Europe and USA, they have started putting up a counter for the sale of old garments. As well as if you look at the number of recycling lines in the entire world, they are increasing exponentially, where the both post-consumer as well as the pre-consumer fabrics are getting recycled into the fiber, and the demand and the yarn is again made out of that partially. So this trend definitely in the Western world is catching up. In the Eastern world, which are the poor countries like India, China, this trend is not there at all. But both Europe and USA, there is some change happen, and the next generation definitely is looking at it with a more concern because they want to look at sustainability in a better way. So it's just a starting trend. We'll have to look at how does the demand improve. But going by all the regulations and laws which most of the governments are considering, this will be taking definitely a part of share of the virgin fibers.
So can there be an opportunity in us? Is this something that we can also explore doing the recycling?
Yeah, we are already doing so. We have one recycling line with a capacity of about 6 tons per day, which is running full. We have already ordered the second line of another 6 tons per day. And most of the times the recycling percentage in a garment is between 20 to 30%. So if I have a 6 tons line, practically I can do close to about 25 tons of total yarn. So we have, and our product is well established, well accepted by lots of good brands, and we are definitely looking at this as one of the growth areas for us.
Okay. In the recycling segment, the margins would be better than the yarn manufacturing, or it will be inferior?
Generally, a little better.
Okay, sir. Okay, thank you.
Thank you. Our next question is from the line of Resham Jain from DSP Asset Managers. Please go ahead.
Hi. Good evening, sir. So I have just two questions. First is on technical textile. I heard that margins are going to be 25 to 30%. I was actually I went back and saw the Q4 conference call where we actually mentioned that the margins will be similar to company average. Has there been any change in the initial plan versus now?
No, there is no change in that plan. So what we are saying, there could be two segments within that 100% man-made fabrics. One is purely on a 100% polyester base where the margins could be the average, but definitely within that there are some segments which are a kind of a replacement of a technical textile where the margins could be better. So I think our knowledge in India today on this fabric or on this product is relatively less, and it's only slowly as we implement the project, there could be a possibility for us to improve the margins, because as of now there is a demand, and whatever estimate we have done, it could be in the range of from average to a little better. And in any case, we said the average of fabric. The average of fabric in any case today also is better than the company's average.
Understood. Clear, sir. So the second question is on green energy, and you can correct me if I'm wrong. I was just looking at the numbers. Our green energy contribution to the overall energy consumption is close to 5%. Is that correct?
Yeah, that's correct.
Sir, when I look at some of the top 5-7 companies in India, it seems that our number, and now these days in the last 3-4 years, the green power has become much more cheaper than the traditional power source. Is there any reason why we are a little slow on this front versus others? And are there more accelerated plan to increase the green energy source?
Definitely we are slower, or we are behind most of the today in comparison to lots of good players. There is no doubt about it. But having said that, we have already accepted this and we are working very aggressively on this, and your idea is correct that next 2 years we are trying to reach from 4-5% to at least 25% of the green energy in next 2 years, and maybe there could be a possibility that we will be crossing this 25 to even 40% also. So there is definitely a very aggressive plan for next 2 to 3 years, and whatever delays happen, we are trying to catch it up as fast as we can.
And sir, what will be the benefit when you do the ROI or the overall energy cost you have in terms of rupees crores versus this change? What will be the total benefit you are envisaging in next 3 to 4 years?
Our idea is, first of all these thoughts which we are having is not purely from the ROC perspective. I think most of the customers or most of the brands are talking to us for the green energy, where they do not want us to consume coal, they do not want us to use the conventional electricity, etc., etc. So this issue is basically coming from the brands where they are forcing or they are pushing or they are suggesting us to do this. Having said that, every project will be looked at in terms of the commercial, and I expect every project will give us at least 15 to 20% return on the capital employed, at least 15 to 20%, if not more, or maybe most of the cases it will be more than that. So I think because there are different combinations where we are looking at the roofs solar, we are looking at the biomass boilers, we are looking at the project where the power to be taken both wind as well as solar from the outside. So there are many projects which are going on, and we are evaluating every one of that. I hope we should be in a position to get whatever investment we do, at least 20% return on that.
Understood, sir. And sir, last one is on fabrics. Overall, where are you seeing a higher kind of traction in the fabric business, more from domestic or from export business? And the expansion which you have announced, out of that, how much is for fabric? If you can just guide on that. I think 175 million meters to 200 million meters. Is that correct? And by when it will get completed?
Right. So on the fabric, I can talk on the capacity expansion. So our major is solid dyes. So we are expanding solid dyes by say 20%, and this capacity should also be operational in the next 14 months. So that is first. In yarn dyed also we're expanding a bit, say around 20%. Print, as mentioned earlier, we just added a machine of digital print, so we are okay in print as of now. So as of now, regarding demand, definitely there is a demand pull, especially from the export market. We would say that this is mainly driven by the drying up of inventories by major customers. So, for example, US has a good demand pull as of now. We are running at 100% capacity utilization, so that is first indicator. And second indicator is also that we have visibility of good orders up to Jan, so and even further than that. So, and as for domestic market is, as we know, we just passed through festive season. So we're just waiting for some customers to also give feedback on how they have performed. But as of now, it looks okay.
Okay. Thank you. All the best.
Thank you. Next is a follow-up question from the line of Hemang Kotadia from Anvil. Please go ahead.
Yes, sir. My line was disconnected. I just have one bookkeeping question. What is the net cash on the balance sheet right now?
Net cash.
It's almost 2,300 crores rupees. That is 950. And the debt is about 1,000 crores.
Okay. Thank you, sir.
Thank you. Our next question is from the line of Rajesh Jain from RK Capital. Please go ahead.
Yeah, thanks for the follow-up. So, considering that there is a good demand from Europe, which you have mentioned in various calls, and that you are undertaking modernization of machinery to have faster turnaround times, because as you mentioned in the last call, the customer needs faster response and quick turnaround time. So considering that, what could be the trajectory of our sales volume growth for the next 12 months?
No, definitely we are moving more and more towards the brand business. So the brand business, when we say the brand business, that will not be coming directly from Europe. The end product would go to the Europe or to the USA, and the garmenting will happen in the different parts of the world, which may include the Asian countries where the garmenting would happen. So more and more brand business can definitely give us a better margin, and for that we require to make our shoppers more profit so that the deliveries could be given to them in a shorter period of time.
Yes. So considering that, because you will be able to cater to your customers' demand in a quicker time.
do you anticipate a good sales volume growth? And also considering the CapEx, the upcoming CapEx, like over the next 12 months, what could be the potential sales volume growth? Do you foresee? Do you have any numbers?
No. As of now, we will not be in a position to give us numbers because the demand is coming every day, is increasing every month, every day. So I think we are only expecting that we require to create that capacity so that further demand would come. Today, whatever is the capability we can give them in a shorter period of time, we are already exhausted it. Now we are further enhancing or increasing it in a big way so that that volume could come.
So once that capacity, in other way, like by when that capacity is coming up, and how much more firepower it would give you in terms of 100% capacity utilization, how much volume it will add?
Most of this capex will be completed by June next year. March to June quarter will be completing most of this capex.
Okay. And at 100% utilization, how much would it be able to add? Considering not only the capex, but also the faster turnaround times which this will enable you.
Our efforts are for the same. Our efforts are on the same. Let's see how the market goes.
Okay, sir. Okay. Thank you.
Thank you. As there are no further questions from the participants, I now hand the conference over to the management for closing comments.
So thank you very much for this conference call. And I think it's been a wonderful journey. Though in the challenging times, the business becomes more difficult, but at the same time, I can assure you all the efforts being done by the management in terms of passing through this time successfully and with a decent margin, all efforts are on. And as well as fortunately for us, as of now, since the fabric is doing pretty well, so the company doesn't have any issues in terms of the overall margin growth happening. But at the same time, as the challenges are increasing, we are agile to look at those challenges, and we are internally looking at all our cost structures very carefully. Lots of initiatives the company has taken, and I'm sure by the time the good times comes in, we'll be ready to take full advantage of good times also. Thank you very much for all the patience and your continuity of the holding with us. And I'm sure these things definitely will improve maybe next couple of quarters once the government takes some decision, and we'll definitely look at a much better result in the times to come. So thank you to all the participants as well as BNK to hold this conference.
On behalf of Batlivala and Karani Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.